We're going to talk about what Goldman Sachs just had to say about the stock market at a time when the volatility index is spiking higher. We come over and look at the fear and greed index. We actually ticked a little bit weaker down today, down at 71 from the closing price on Friday at 73. So the question is it a time to be fearful in the market like the VIX may suggest? Now today, the VIX was up 17.92%. And what I normally will tell you guys, if the VIX is up or down plus or minus 10%, then normally the next day ends up being an adverse reaction. So in this case, with the VIX being up over 10%, normally tomorrow would be an up day in the market. But when we look at the economic calendar, just like today, we had no major economic news, and tomorrow is going to be a little bit of the same. We don't start getting any major economic news until Wednesday when we get the FOMC meeting minutes. Now, if we look right here, US future slide as yields rise back over 4%, yield curve reinverts, oil surges. And let's talk about this real quick. When we come over and we look at the yield curve, we can see the red line right here represents anything below that price. The yield curve would be inverted. However, we did not close below that level. Now, it doesn't take away from the fact that yields have been on the rise up. We see the 10-year yield currently trading at 4.02%. So we are now back above 4% on the 10-year yield. Then we come over and we look at the dollar index. We see the dollar index having a little bit of problem right here at our structure breakdown point. And like I always say, this can act as a target, but once we get into it, expect the market to do something other than continue in that direction. That could be go sideways. That could be a slight little pullback. And today we saw with the doji candle, the market was very indecisive, meaning we tried to go higher, we tried to go lower, but we essentially closed at the same location in which we opened. Then we come over and look at gold. Gold slightly going lower today, but for all intents and purposes, this bull flag could still be in play with a price target up here at 27.82. However, I am still favoring a retest of the swing point down here at essentially 26.27. But again, we got to wait and see. Do we break out of this pattern to the downside, or are we going to go ahead and validate this bull flag pattern? Now, when we come over and look at the volatility index again, all right, we're talking about this a lot during the live stream today. And if you guys want to make sure you don't miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But as we saw the VIX continue to spike up today, we also wanted to keep an eye on crude oil. Why is that? Well, that can give us a very good indication in terms of, is it tensions in the Middle East that could potentially be causing fear in the market and crude oil to be spiking? And we can see they were both moving very well. Crude oil today was up 3.94%. Now it's been a little bit of an overachiever. We've already hit the 100% ABC pattern on the way up. Now we've been able to go ahead and crush the 127 extension. Will we start to get a pullback in the near future? Well, not when we keep seeing news articles like this. More than 130 projectiles fired into Israel on the anniversary of October 7th. So as long as we have the fear of tensions in the Middle East continue to escalate, we're going to see prices of crude oil continue to scream higher. We're probably going to also see the VIX continue to rise as well. Then we come over and look at what Goldman Sachs has to say. Goldman Sachs has bumped its S&P 500 target for the third time this year. And what it essentially goes on to say when we scroll this down is, now Goldman Sachs sees the S&P 500 essentially hitting 6,000 by the year end. And that's not really that far-fetched, because on this cash market, if we go ahead and we map out A to B equals C to D, we can see that gives us a price projection up here at about 59.39. So I got to be honest with you, I kind of agree with that price projection. Now, the timing, the next 3 months, I don't know. We have the elections coming up, so there'll be a little bit of uncertainty in the market around the elections. When we look at how the indices fared across the board today, the Dow was down 398 points. The NASDAQ was down 163 points. S&P 500 was down 55 points, with the Russell 2000 being down 1.69. Now, where we look at advancing issues versus declining, we had 72.2% of issues declining on the day. And we come over and we look at sectors across the board. The only sector in the green was energy. And I already showed you guys a chart of crude oil. It was an absolutely rocket ship on the way up. Everything else was sell, sell, sell. And we could see that very evident by the heat map. We kept talking about this during the live stream as well. Look at the heat map. The only bright spot that I really see is NVIDIA, up 2.29%. When we look at a chart of NVIDIA on the daily chart, we still got a price projection up here at about 132.99. That's going to be this ABC pattern on the way up. Now, there is a larger ABC pattern as well up here about 141.27. But when we dive down and we look at this on a smaller time frame chart, you can see we're actually rally, boom, we start to pull back. And this is when we seen the market really starting to give it up, when Nvidia basically started to get its little bit of a pullback. But let's be honest with ourselves. When we look at this on the daily chart, that really did nothing in order to destroy the context of Nvidia making a run up towards 132.99. Now I want to make everybody aware, time is running out to take advantage of Apex's 80% sale off all their valuation accounts, passing as little as 1 day, $35 reset fees, and even better, $85 activation fee across all account sizes. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, when we look at stocks like Microsoft closing lower today, down 1.57%, and even Apple was down over 2% on the day, trying to come back and fill this gap. However, not quite able to make it today. Then Elon's stock, Tesla, was down 3.7%. So we saw a lot of red out there in the markets. So what does this mean moving forward? When we look at the Dow Jones has had this upper level consolidation. However, on the daily chart, the MACD indicator is crossed to the downside. Then as we look out here on the 1 hour chart, you can see we're just kind of basing out near the zero line for the MACD indicator. And now it's just started to turn a little bit lower. Now, small caps today also were very weak. We can see this on the daily chart was selling off. We had a little bit of a buying tail towards the end of the day, but was able to come down, fill in the gap out here from a few days back. And then we look out here on the 30-minute chart, we can see we have this large gap from last week, which now has come back and been filled. So is that all the pullback we're going to get? Are the indices prepped and primed and ready to head up higher? Because when you look at the NASDAQ real quick, I don't really see that on that front. We saw the NASDAQ today down over 1%, and on the 1 hour chart, the MACD indicator just got a fresh cross to the downside. We look out here on the 30-minute chart, and we can see we closed the gap from Friday. And as we look at this, we basically came down towards the point of control from last Thursday. And now we're going to see, do we start to try to turn up? Right now, we are not showing any signs of weakening of the downtrend when we look at the MACD indicator just yet. And we'll cover the volume profile levels tomorrow. But one thing you are going to want to focus on is this huge minus development area in between what I would call a double distribution profile or an uppercase B. Now, the bottom of that will be target number 1, roughly right near the high of that last 30-minute candle, all the way up here towards that structure breakdown point. Now, it doesn't mean we're going to make it there tomorrow, just something we most certainly want to pay attention to. Now, as we come over, we look at the 4 hour chart real quick, we can see from a weekly perspective, we did test the untested value area high. We rotated lower. We tested the point of control. Are we going to continue lower? Because we still have some targets that still have not been filled just yet. The first area to the downside would be right here about 19,791. Then down here towards 19,738. Then we have that untested point of control at 19,664. As we come over and we look at the daily profiles, notice we are closing below value area low off the daily, which comes in at 20,056.50. We have the point of control up here at 20,136, with value area high being 20,182.50. Now, pay close attention to this minus development area. I'm going to go ahead and mark this off on my chart. And you can see we've already kind of wicked into it, pulled back. If we come into it a second, third time, it's more likely than not going to break, and that would open the door for a retest of that point of control up here at 136. Now, as we come over and look at the SPY real quick, you see that upper level consolidation. We were able to close the gap from Friday, but notice we still have that large gaping gap from the day after the FOMC. MACD indicator on the daily chart is crossed to the downside. On the 4 hour chart, we're just kind of meandering, making our way down towards the zero line. Then on the 1 hour chart, we just now got a fresh cross to the downside. But if we go ahead and we blow this up here just a bit, we could also make the case that we have a swing low right around down here. As we're coming back down, if the market bounces, that could set up a huge MACD divergence on the MACD indicator. So something we definitely want to pay attention to and see how it develops. On the 30-minute chart, MACD indicator looks horrendous at this moment, but we do have this huge minus development area that we are going to want to focus on. I'm going to go ahead and get rid of the prior minus development area, and let's go ahead and map this out. And that's going to be right in this zone. That zone's going to start at about 568.79 all the way up here to about 569.52. Now, keep in mind, the first time we come up into it, expect a consolidation or a slight pullback, or it could be a complete trend reversal and we just come right back down. Second or third time, that's when I expect that level to break and then start trying to really come back and test into this high volume area that we have just above us. Now, when we come over and look at the S&P 500 futures markets, Notice we had a complete volume profile rotation on the weekly chart. We essentially opened above value area high. We came down, we got the test, which we talked about in Sunday's video. We tested the point of control, we tested value area low, and now we are currently trading above value area low. So now that we've been below value area low and we're back above it, first target is going to be the point of control. But if we start coming back below value area low, then I really want to turn my attention over here to this high volume area on the previous weekly profile at about 57.20. Anything below that, we have a minus development area at about 57.12. Then we have that untested point of control at 56.97.75. Let's see, will we make it down there this week or not? Now, when we come over and look at the daily profiles, keep in mind, we are closing below value area low off the daily, 57.57. So that means that tomorrow or the following day, highly probable at minimum, we come back and test that level. We also have a structure breakdown level right up in here, which I'm going to map out from candle wick to the candle body. That zone starts out at 57.62 to about 57.64. Anything above that, then we're looking at the point of control at 57.81 with value area high being up here at 58.07. Now, if you're more conservative of a trader, if we stay below value area low, then it makes sense to continue to look for those lower prices off of the higher time frame chart. But if and when we get above value area low, then I want to go ahead and target that structure breakdown level, which is basically right at the top of this little minus development area off of the daily profiles. Now, if you want to learn how to place a stop loss in NinjaTrader and the difference between a stop market and a stop limit order, make sure to watch this video right here.